Amazon was trading around $191 in 2021. In 2026, I'm buying Amazon with an average price of $200. The company's fundamentals are stronger than ever, but the stock is still trading in the same range. That raises a very important question. Is Amazon setting up for a bigger move? Hi, I'm Harsh, and today in this video, I'm going to share why I'm buying Amazon from technical analysis perspective. Before we dive deeper, let's zoom out a bit. Amazon today is much more than an e-commerce company with major businesses in cloud infrastructure through AWS, global online retail, and a rapidly growing advertising platform. So fundamentally, the company is stronger than ever, yet the stock price has been consolidating for a while. Now, please go to Amazon and we are going to take a look at a daily time frame. Here, each candle is represented by a day. We are going to understand one simple concept known as wedge patterns. Whenever a stock is consolidating for a while, for Amazon, it's been since last 5 years. If you have a line on the top and if you have a line on the bottom, the price is basically consolidating where it is just moving in a specific range until it breaks either on the upside or either it breaks down on the downside. So this is what is known as a wedge pattern in technical analysis. You can read more about it in my blog right here. So going back to the charts, if we look at the key points going back all the way to 2021, and you just simply try to connect those dots. Amazon is being restricted right at the resistance level. And if you try to create the same thing on the bottom, each time Amazon tries to break down the bottom zone, it couldn't. So you can clearly see that Amazon is trading between a range, and each time price pulls back to the support zone, that becomes a good buying opportunity. So let me quickly plot this on the charts. So as we can see that each time Amazon tried to break the highs, it was always rejected. And the same thing on the bottom, each time it tried to break the bottom, there was a lot of buying pressure. So now the bigger question is, when will Amazon break out? So until Amazon takes out the resistance level, there is no room for it to move higher. If you hammer on a door multiple times, like Amazon has been doing on the resistance line, eventually that line is going to weaken. And Amazon might have a bigger move on the upside. The second factor we are going to take a look is relative strength index. You can read more about it in my blog. Simply putting it down, relative strength index gives you the strength of the stock when the price is falling. So in this case, when the price was falling down right here, and eventually it was consolidating, the strength of the stock was becoming very strong. So this explains that the momentum under the stock is gradually improving and eventually it might take off. So if you combine that with the support zone that we have, it becomes a two-factor setup, which I really love for Amazon. Technical analysis is always a probability. So I never go all in at the first support. I always have some room to DCA in. So if in case something happens and Amazon were to drop down, the next buying level that I would have is right here, which was the tariff low, and eventually I'll start DCAing in. But a key point to note, I will never ever think to buy at the resistance level until the price action breaks and confirms above. This was my quick thesis on why I am buying Amazon right now. I hope you like this video. If you did, please do like, share and subscribe. This really motivates me to creating videos like this. Thank you so much and see you in the next video.